All right, thanks everyone for joining today for our fundraising webinar. My name is Nathan. I run a startup called Foundersuite. I'm sure many of you are familiar with or using. If you're not familiar, we make a platform for startups that are raising capital. It consists of an investor CRM, investor newsletter tools, an investor database, and we've been around about 3 years. We launched the product 2 years ago, and our users have raised over $500 million, which is exciting. But before that, I spent about 10 years, actually closer to 12 years, at a company called Venture Archetypes, which was a consulting business, like a fractional CFO role. And I worked with hundreds of startups raising money. About half the time we were successful in raising money, half the time we failed. So this talk is basically a collection of everything I learned along the way raising money for lots and lots of startups. First off is how not to do it. And Hunter Walk is a venture capitalist here in San Francisco, and I just love this tweet. Will you intro me to investors is too broad to be acted upon. This is how a lot of founders, especially first-time founders, approach it, right? They say, okay, it's time to go raise some money, and they just start asking everyone they know if they can introduce them to investors. And the reason that's not a great strategy is, one, it's too broad to be acted upon, as Hunter says. The other one is it's putting the hard work of figuring out who you should be talking to on the shoulders of the other person, where really that's your job. And when I was doing this as a consultant, I would put in 50 to 100 hours in researching and building a good target list of investors. So instead of doing it this way, which is unfocused, I like to take a page from sales. And if you've ever been in sales, especially B2B sales, it follows a pretty straightforward playbook, right? You build a list of leads or targets. You qualify those leads. You engage with them, and ultimately you're driving all of them through your funnel to a close. And we can take that same metaphor and apply it to fundraising. I use the funnel metaphor a lot. But essentially, fundraising is just another sales process. You're building a pretty large list of potential investors. You're screening, filtering, qualifying that list down. You're finding the right person to reach out to. This applies especially if you're, pitching venture capital firms, right? You don't just go pitch a fund. You need to find the right champion, decision maker, partner at that fund. And then we figure out how to reach them. And really it's all about the warm introduction, which we're going to get into a little bit later. Those introductions lead to pitch meetings. Hopefully those pitch meetings lead to progressively deeper dive pitch meetings. And then that gets into term sheet and due diligence, right? If you're lucky, and hopefully multiple term sheets if you follow all the tips in this talk today. And ultimately, you're selling shares of your company, or if you're doing a note, you're doing a promissory selling shares of your company, essentially. But really, it is just another sales process. And if we break it into its step-by-step approach, I find that it removes a lot of the frustration and chaos and anxiety that founders have about raising money. So this is what we're going to do here. Step number one is building that top of the funnel, especially if you're raising a seed or pre-seed or angel round. It's really a numbers game. I always tell founders you need at least 100 investor targets on your list, and realistically that's probably more like 150 to 200, sometimes even more. When I raised our seed round for Foundersuite, I pitched over 200 investors and ended up with 1 seed VC and 10 angels coming in on the deal, and we raised just a little under $1 million. And you can do that math. Pitch 200, 10 came in or 11 came in. That's about a 5% conversion rate, right? And so that also means I'm getting rejected 95% of the time, and that's actually pretty typical. So sometimes it's a shock for founders who have been very successful in other areas of their life that they're just getting rejected constantly. But that rejection is normal, and that also just further emphasizes why you need a good, healthy target list to start with. Angel list is pretty useful for building a target list. Angel list is evolving. We'll see where they go, but they still have a pretty good database of investors. I think there's about 25,000 investors there. It's free. You can play around with it. Within Foundersuite, we have a database. We're getting close to 90,000 investors in here. we're pretty aggressively building it out. I will say it's a very large database, but it's fairly shallow. We basically collect through a variety of means investors. We tag them by market tag and location tag, and then we collect their social profiles and a bio. So that's the depth of our data, but it's a very large database, and we're actively building out. We're adding about 10,000 VC firms right now and about 28,000 what I call alternative investors, which are things like family offices, fund of funds, pension funds, hedge funds, private equity firms, endowments, foundations, things like that. So it's getting bigger and bigger. And the way to use this really is to just start typing your most relevant market tag and then pick from the drop-down menu. You have to pick from the drop-down menu. There's no free-form search. And likewise with location, it's typically best to search by city. So that is our database. It's free up to a point. I can't remember where we cap it out, but it's free to play around with at least. And then when you find someone you like, most people will do a little bit of deeper digging on their own, open up their LinkedIn or AngelList page, see if they're a good fit, and if they look good, you add them to your list by clicking Add to Research. So that's our database. CrunchBase is another pretty common tool people use. The way I like to use CrunchBase is I make a list of 10 or 12 companies that are similar to mine but not directly competitive, and I plug each one into CrunchBase and I see who funded them at the relevant stage I'm at, right? Kind of cross-referencing. And then another way to use it, if you have an investor, you can plug that investor into here, and it'll show you who they co-invest with. And you could also just do some free-form searches. The searching is a little confusing, in my opinion, but you know, it's pretty cost-effective. I think their plans are not too expensive. Lots of other places to build our funnel. These first three here, PE Hub, Inside Venture, Venture Pulse, are daily newsletters. You should subscribe to them. They're free. And basically, when a startup raises capital, they announce it in these newsletters. And so I just spend, 10 minutes a day, probably with my coffee, skimming these newsletters, seeing who's getting funded. And if they look interesting, I'll make note of who their investors were. The other pretty relevant part about this is when a new venture firm or fund is announced. Both when a new firm is announced and when an existing firm raises a new fund, they typically announce it in these things. So that's great, information for you to know, because the best fund to pitch is one that just raised a new fund, right? They've got dry capital, fresh capital to put to work. Conferences can be a pretty good way to build your target list, especially if you're in crypto or blockchain or cannabis or a new and emerging space, because these conferences just sprout up out of nowhere. And investors love to build their own brand and deal flow by getting out there on the speaking circuit. Quora, TechCrunch, Medium, pretty obvious. I'm sure you're looking at some of these. Quora is kind of interesting. People have answered a lot of questions about fundraising. Who are the top 10 investors in, Los Angeles, stuff like that. PitchBook, MetaMark, and CB Insights are paid databases. Now, I mentioned Foundersuite database is large but shallow. These are pretty deep. Like PitchBook, we actually have a subscription to. It's really amazing data. You can get into who's on the board of companies, valuation information, all kinds of stuff, even some contact information. But the problem with these, they're very expensive. PitchBook, I think, starts around $20,000 a year, US dollars. CB Insights, I'm not sure exactly what their price is, but I think it's even closer to $50,000. Mattermark is cheaper, but they were just acquired, so I don't know what the future holds for them. But if you have access to these through a friend, or maybe you're an accelerator that has an account, they're really, really useful. And then mining your own personal network. I'm going to show you two ways to kind of mine or scrape your own network to help build your funnel. So the first way is with LinkedIn. So this is actually that's not my homepage. The customer gave us a really nice testimonial that was not pre-staged, sorry. Anyway, I'll go to my search bar on my homepage and I'll just search for something like angel investor, right? Pretty generic. It always takes it's always a little slow. Okay, so 5,000 results. That's too big, right? So then I want to go to filtering. And what I'll typically do here is filter by second degree connections and then usually a location. All right. See what we get. I know what we get because I've done this before. But 531 results. So that's much, much more manageable. And basically what these results are people who have the word angel investor in their title, who live in San Francisco, who I have some mutual connection to. That was the second degree checkbox that I did, right? So theoretically, I should be able to get an introduction to anyone on this list. Now, the next step is figuring out who I actually want, to reach out to. So what I do there is I'll right-click every link, open it up in a new tab, and oftentimes I'll open up, 50 or 100 tabs at a time, and then just kind of spend about a minute or less on each one. If Donna Pawar looks good for me, I'll add her. Yeah, looks like a woman. I'll add her to my list. And I just kind of go through that and do that. And you can actually populate a pretty good list by doing that. The other way is I'll show you a little hack we do within Foundersuite to build your target list. Let's see here. Let me move this. Oops, sorry. So let me go back to my home board. So this is my board, and what's notable about this in terms of this is I have a column here called Steve B. Leads. So Steve Bennett is a professor at San Jose State. He's one of my advisors, really well-connected guy. And so I came over here to these three small dots. I made a new column. I called it Steve B. Leads. And then over in settings, I invited Steve to be a member of my account. And I asked him, Steve, can you add some people to my board from your Rolodex, from your network? And he actually added like 15 or 20 people from his Rolodex to my board. And then as I, asked him to make the introductions, I'd move them into my funnel. But I did the same approach with 5 or 6 other advisors and ended up generating about 50 or 60 good, solid introductions by having a structured approach to asking my advisors and other people to open up their Rolodex, right? So that's just another way to continue to build your funnel. Okay, this thing is always in the way. Hang on just a second. Okay, so, enough about that. Basically, start to tune your radar in and you'll see investors all over the place. We talked about that. So step number 2, we just built a list of maybe 200, 250 potential targets. Now we actually want to start removing people from that list. I use the sales metaphor. Good salespeople don't just chase every prospect or every lead. They spend a lot of time researching them, qualifying them, make sure they're actually good fit, and they, prioritize them and rank them. And you want to do that with fundraising too. Anyone who's invested in a competitor, just have to take a break every now and then and have a drink. Anyone who's invested in a competitor you don't even want to talk to, just remove them right away. If they're ethical, they won't talk to you. If they're unethical, they'll send your pitch deck to the competitor. If you're pitching VC firms and they have not raised a new fund in the last 2 or 3 years, they're probably only doing follow-on deals to their existing portfolio companies. They still might take a meeting with you, but they're low probability of investing, so you might deprioritize them. And conversely, like I mentioned, the ones that just raised a new fund should be higher priority. Same with angel investors. If you plug an angel investor into AngelList and you see all their deals are from 2015 or 2014, they're probably taking a break. Wrong sector, wrong stage, wrong geographic location should all be obvious, but if you're a fintech, you would not pitch a med tech investor. A lot of it, not a lot, but maybe 25% of VCs will have a very specific geographic location, like they invest in, Southern California AI startups, and you're not in Southern California, you wouldn't chase them. It's part of their charter to invest in that location. And then finally, bad reputation. Excuse me just a moment. This is really important, maybe the most important of them all. You're getting in bed with these investors. It's really like a marriage. You're in bed with them for the next 5 to 7 years of your life. So you need to find good partners that you can work with over the long haul. So there's a site called thefunded.com. Kind of looks like from 1980s or 1990s or something, but the content's pretty interesting. It's kind of like a Yelp for VCs. A newer one is called Know Your VC, and they have like kind of commentary on that. The only caveat I give is that these reviews are often written by founders that were rejected by the investors, so take it all with a grain of salt. But basically, bottom line, we want to be removing maybe 25 to 30% of your targets. So what remains is a really highly qualified, highly focused, highly relevant list. And that is very important because so much of fundraising is about getting momentum going on your round, on your deal. And you'll never get momentum going if you're pitching like bad targets, right? It just doesn't happen. So don't shortcut this step. Now with the list that remains, we want to figure out how to reach everyone. LinkedIn is the most common tool here. Facebook a little bit as well. But basically, you just plug everyone into LinkedIn one by one, and you see if you have any mutual connections. If you have more than one mutual connection, congratulations, you're a good networker. If you have more than one mutual connection, there's a hierarchy of who to ask for the introduction. The first on the list would be someone that has made Tim money in the past. Tim will take that intro all day long. Second on the list, someone that Tim has co-invested it with in the past, maybe an angel that feeds him deals or another VC. Third on the list is a portfolio company founder of Tim, right? Tim spent the time to get to know that person, done the due diligence. There's a level of trust there. Fourth on the list are what I call the professional connectors. They're often like the biz dev guys and gals who work at big accounting firms or law firms. They know everyone in the ecosystem, but they make a lot of introductions, so sometimes the signal is not as strong. Fifth on the list is someone that Tim met at a conference 2 years ago. They connected on LinkedIn, but they don't really know each other. If you have zero connections in common, what do you do? This is like super common question I get. Best thing you can do is to reach out to a couple portfolio company founders that Tim has invested in and get a dialogue going with them. I see Tim has invested in your startup. I love what you're doing. I'd love to hear what it's been like working with Tim. Is he active? You start a dialogue, a rapport with that founder. Then it's okay to ask for the introduction to Tim, because founders are pretty good about helping other founders, and Tim has that trust or relationship with that founder. If you don't want to take the time to hustle your way in, should you send the cold email? 95% of the time, no, because Tim is already getting 50 to 100 warm introductions a day from people he knows and trusts. So your cold email already has kind of a negative spot on it that you weren't willing to take the time to network your way in. Looks like we have a question, so let's open that up real quick. Maybe not. Is there a question? Oh. Do investors on our platform know that they are on the platform, or was it added to your database without explicit approval? No, they don't know they're on a platform. We built this. It's almost the metaphor I use is if you were going to build a database of all, amateur baseball players, minor league baseball players, you wouldn't need their approval to get in your database. You would just go spider them and collect them. I think it's okay to say, a lot of investors have heard of us and like us, so I don't think it would be a bad thing if you said we found you on Foundersuite, but it would be the same as if you found them on CrunchBase, right? Good question. Interesting question. Never had that one before. Okay, so moving on. The cold email almost never works. I've seen it tried by a lot of startups, and again, because so much of Tim is filtering deals by how people reach him, and the warm intro is usually the way that happens. All right. Okay, so now we need a tracking system. I used to build, when I was doing consulting, I'd build these elaborate spreadsheets for my clients that were raising money, and it's great, right? It works fine for about a week, and then it gets really, really messy, because if we're, pitching 150 or 200 investors, each time you have a meeting with an investor, that leads to 2 or 3 follow-up items, and, it becomes a pretty big mess. You quickly things start to slip through the cracks. Let's see, I think we have one more question here. Okay, thank you. So basically, we need a way of tracking all this interaction. We want to run a process. And of course, this is where, the reason we built Foundersuite. So I'll just show you a couple of very quick kind of tips and hacks for Foundersuite. As you can tell, if you've been into the platform, it's structured like a funnel, right? So you have your kind of large target list, and your job as the CEO is to be moving all these investors through the stages of your funnel: contacted, pitch, diligence, into either committed or said no. And of course, the joke we make, it's pretty cheesy, but it's like a chess game. You're moving all these pieces from left to right. If you move them all into the committed column, you win the game. If you move them all into the no column, you lose the game. But realistically, practically speaking, I come in here and I kind of work on a column at a time. Like I'll say, all right, I've been introduced to Peter. What can I do to nudge him along to try and set up a pitch meeting? Or, I pitched Gary 2 weeks ago. What can I do to, what is he waiting on? Is he waiting on customer references? What can I do to get him into diligence process? And so on and so forth. So, that's kind of the way you think about your funnel. Show you one other quick thing here. Just a few kind of best practices, I would say. If you're working on your fundraise with your co-founder or advisors, I recommend having an owner for every target, right? This is just a good kind of sales practice. Someone who's ultimately responsible for moving this target through their funnel into a yes or no. You can obviously add notes. Keeping on top of all the activities around your fundraise is really, really important, right? So if you have a meeting with this guy, type it here, set a time, and export it to your calendar. So you're staying on top of all these activities. If you sent this guy a term sheet or pitch deck, upload it here to the upload file. And lastly, there's the Gmail sync, which every now and then we have some issues with. Just FYI, we're working on it pretty aggressively. But all your email threads get pulled in here too. So this becomes that system of record for all notes, tasks, files, meetings, emails related to this particular investor. And you can move them between rounds up here. The other thing I'll just mention really quick, I guess we don't have too much on here, but we have this new metrics dash so you can see all your to-dos coming up. That's pretty useful. Okay, that is the CRM. Oh, one other thing I did is I actually made a separate column where I'm keeping all my connectors. These are the people making the introductions for me, so I just like to have them on my board. They're not really part of my funnel. That's why I put this column over here. I think that's enough little tips. Always happy to do a demo with anyone want to go deeper. Okay, so you need a tracking system. You've got to run this like a good, efficient process if you want to get momentum going around your round. And again, your job is to get momentum going, so these are the tools to do it. Before we actually get out there and start fundraising, I'm sure many of you are already out there, but typically before we get out there, I always tell founders, make sure you've given your pitch at least 5 or 10 times to people who will give you hard, honest feedback on your pitch. Let's see, looks like we have a little question. Is there an export-import feature? Yes, there is. Thank you for asking that. Yeah, you can import a CSV right here, up to 200 at a time, and then you can export a CSV. Export and import are actually on the gold and silver plans, but yes, you can import and export the data. Okay, good stuff, good question, thanks. So I always tell founders, make sure you're giving your pitch 5 to 10 times. One of the most common preventable mistakes I see founders make is they start fundraising with a bad pitch. And it's the dumbest thing ever because you can't come back to that investor later, 2 months later and say, oh, I improved my pitch. Can I pitch you again? No, it doesn't happen. You're already, rejected. They make pretty quick decisions most of the time. And so, don't go out there with a bad pitch. So make sure you've given your pitch quite a few times. And then even, when you've done that with your attorney or your friends or whoever, people in your network, The first couple pitches with real investors will often be kind of throwaways, so I would not put your very first target or your highest target as your first pitch, right? Stagger them a little bit. You also need a good, budget. If you're raising $1 million, show me how you're going to spend that money and where it gets the company. And even better, if you can put together a financial business model and show how your business model scales. Last thing I would say, also have like a one-page teaser, which is pretty good. And we built ours in Fundraising. So now we're ready to actually start the conversation with these investors. When you are doing the research of how you're connected and how to reach these investors, I find that you'll find like a lot of power connectors. A lot of roads lead through a couple key connectors. And so this is the email I sent out to one of our power connectors, guy Jeff, who works at NASDAQ. Jeff, I'm starting to do bring our seed round in. Do you know these people well enough to make a lightweight intro? And I found, these are all people on my target list that I found that Jeff is connected to. And so this email, Jeff can simply respond to, hey, I know Tom, I know Jessica, I know Wesley, I know Clark. I don't know these other people, or, some of them aren't doing deals anymore. He can just very quickly say yes, no, yes, no. Contrast this to that first slide I showed you of how not to raise money. If I had just gone to Jeff and say, hey, I'm raising money, can you introduce me to some investors? He would have to think and process his entire network of connections and pick up names for me. And that's a lot of work to do. I'm asking too much. Whereas this, he can respond to this in 5 minutes or less. It's very low effort. Very low effort means it's more likely to get done. So for each investor, I'll take a quick drink. For each investor that Jeff says I'm happy to make an intro to, I create a new clean email thread that looks like this. Jeff, can you introduce me to target name, Foundersuite seed round, and then this is very important, FFBC leading, 65% committed. At this point, we actually had a lead investor and we had 2/3 of the round full. That's really exciting, sexy stuff. So I put that in the subject line. If I didn't have this, I would put whatever is the most interesting, sexy, exciting part about my business. Maybe it's a growth metric, maybe it's a strategic partner, whatever it is, you should go in the subject line because it's a teaser. Clint is getting 50 introductions a day. We want to make sure he looks at our stuff. It opens up our email. Now, the rest of this, notice how short this email is. Short is good. Good chatting with you. As mentioned, I'm raising a seed round for here's what we do. We make this investor management reporting platform. Here's a link to the website if you want to check it out. It's amazing how many founders don't even include a link to their website in this email request, right? And then the ask. Can you introduce me to target name? Then the why. And then I noticed this guy went to the same very small college in Iowa that my dad went to. So I put it in here just to personalize it a little bit. And then I include a link to our deck. And this is not our full deck. This is a teaser deck. It's a shorter version, higher level, just with some basics about what Foundersuite is all about. And I have it hosted on Foundersuite, of course, dog fooding it. And not everyone likes to include a deck in this first intro email, but I actually like to do it because it's another way to kind of qualify Clint, right? If Clint looks at this deck and decides it's not a fit for him, I'd rather him opt out now versus setting up a meeting with him, driving down an hour and a half to meet with him. I'd rather him opt out. So it's another way to qualify him. And then all Jeff has to do is click forward. Hey, Clint, Nate's a buddy of mine. Do you want to take this intro? Send. Hey, Jessica, Nate's a buddy of mine. Do you want to take this intro? Send. He can bang out, 5 or 10 intros, opt-in intros very, very quickly. And making it easy for my connector to do his or her job is critical. So key point, keep this short, include a good subject line, and make it easy for your connector to do the intro job. Okay, now we are in hustle mode, right? So we're asking our connectors for the intros. I include this slide kind of just for a little, break it up a little bit because it's kind of funny. I'm sure many of you have seen HBO's Silicon Valley. But Richard is an engineer. He's an introvert. He wants to be writing compression algorithms for Pied Piper. but instead he's got to get out here and pitch all these investors. These investors are very smart. They all went to Stanford and Harvard. They're very successful. That's what made them investors. Many have very big egos, right? And this is what they do all day, every day, you know, day in and day out. So they're professionals at investors, whereas Richard, it's his first time. So it's very stressful. And the only kind of remedy to that is kind of to treat it like a game. And I always say, channel your inner hustler. If it comes to you, natural or not, doesn't matter. You need to channel your inner hustler if you want to raise money. So some hustle tips. Let me take another drink. So this first one here is very important. We did all that research. We figured out how we're connected to everyone. A lot of times that, you know, all boils down to 5 or 10 power connectors. We want to be asking our connectors to be making the introductions all about the same time frame. We call this a blitzkrieg approach. And really what we're trying to do is get momentum. Let me touch on momentum. So investors, when you walk in the door, can smell if you have momentum on your deal or if you have desperation on your deal, if the deal is stale. They just have a sense for that. So you want to be, you know, smelling like momentum. The best way to have momentum is to be having a lot of meetings in a pretty condensed time frame, right? Because they always ask, so, you know, thanks for coming in. How's the round going? How's the round coming together? And to the extent you can answer that with, you know, we just started, we're running a pretty tight process. We're using Foundersuite, of course. I've got 10 meetings this week and 12 meetings set up next week, so I'm pretty optimistic we can, you know, get this thing going pretty soon. That shows that you're professional, and it shows that you've got momentum going, right? And later on, as you know, you start to get some commitments and term sheets, that just builds on itself. And likewise, they can smell it when a deal's like stale, and it's just a huge turnoff. So your job is to get momentum going. You should always be improving your pitch deck. When we raised our seed round, I would go out, have 2 or 3 pitch meetings, come back home, have a, you know, put my kids to bed, crack open a beer, and then spend an hour on my pitch deck every night. And by the end, we were on version number 42 of our pitch deck, literally. But the story just kept getting better and better, right? I was improving it every single night. And together with getting momentum, right, these two things are very powerful when combined. You're starting to get momentum going on your round, and your story, your pitch is getting better and better. These things amplify each other. We kind of talked about leveraging VCs off each other, signaling that others are interested. Obviously, never lie or exaggerate the interest, but, you know, it's okay to say I've got 12 meetings if that's a real thing. It's okay to say I've got 2 term sheets on the table if that's a real thing. That's a huge, you know, investors want what other investors want, right? There's this sort of dynamic there, so you want to be signaling that. And then lastly here, this is one of these really important hacks that I'm surprised not more people do. Actually, a lot of people, I've been interviewing people for this new podcast we have called How I Raised It, and almost the universal thread or commonality of founders on our show is that they sent out a regular newsletter to investors, and it really helped them raise their round. So, you know, this is one of these hacks that not a lot of founders do, but it will make you look professional, and it just builds that relationship with investors over time. It's also showing that you can execute and that you can communicate. And so the key thing I always say is every investor in your funnel who has not told you no should be getting a regular newsletter from you, right? Let me just repeat that. Everyone who has not told you no, who's in your funnel, on your target list, should be getting a regular newsletter from you. And this is my last little product plug, but I'll just show you. We built a tool for that. You know, why don't more founders do this? Because it does take a little time. So our whole approach is how do we build like the minimal viable update, right? How do we make something super quick and almost dummy proof? So we basically got 6 sections. We kind of tell you what to write for each section. You can create a KPI table very, very quickly just by picking which KPIs you want to include. If you've got a cool product, pull in an image to that, right, and add an image, or maybe a team shot. It's always great to have like a team shot, you know, photo of the team in there. And then you publish this. And let me show you what this looks like. You can also attach files. Let me show you what an older one of mine looks like. So you publish this, and it looks like this. It looks nice. It looks crisp. We actually did this revenue graph as a screenshot from our accounting program, put that in as an image. We've got our KPI table. It looks nice and clean, and got a product shot in here for some stuff. But we publish this. It generates this URL, and this is what the investors would receive. It looks basically like this, so they can navigate around, and it just looks good. It looks professional. And the nice thing is you can actually track and see who is looking at your stuff, right? And this is an older one, but we're also now showing how much time they spent on your update. So that's kind of a key signal of who's interested in your deal. You can also use the same tool. This was actually a use case invented by one of our customers to put your pitch deck up online. And same thing, you can track and see who is looking at your stuff. Just yesterday, very exciting to announce, we haven't even announced it yet actually, you guys are the first one to see this, but we now have, once I publish this, I can now send it through the system to the people in your CRM. So anyone who's on your CRM, if we have their email address, you can send out these reports, pitch decks, to them. That's a brand new feature. Haven't even announced it yet. So that is it. Last point here about the full-time commitment. This is almost impossible for most founders, but the more you can treat fundraising like a full-time job for a couple months, the more likely you are to get momentum going. I've never seen, or almost never seen, founders who put in 2 or 3 hours a week on their fundraise get momentum going. The deal often gets stale. And then lastly, it's very, very stressful. If you haven't done this before, you're getting rejected 95% of the time. I actually thought I was getting an ulcer about halfway through. When we were in due diligence, I was waking up every night at 3 a.m., like in a cold sweat. That's not an exaggeration. And I had been fundraising for, 10 years. So just acknowledge that that's what you're getting into. If you're ever really in a low point, feel free to reach out to me. I'm happy to talk you through it or coach you. Okay, so a couple more hacks here. This first one, we did some retargeting ads. I'm going to go through this pretty quick because I'm running out of time. We did some retargeting ads. One of our angel investors who did write a $70,000 check said that every time he logged into Facebook, he saw Foundersuite's logo. So maybe it had a little subliminal effect. But really, the retargeting ads plus the monthly newsletter, what you're doing with that is you're just staying top of mind with these investors because, again, they're getting 50 to 100 intros a day. They're meeting with 25 to 30 companies a week. And so you're just one of many companies in their universe. So you need to stay above the noise. So number 2 here, we put our pitch deck up online using Foundersuite. There are other tools to do that, like DocSend or SlideShare, I think. I mean, there's multiple ways to put your deck up online. But the key point is, by doing this, you can keep that online version up to date all the time, right? So even though I sent an investor a link to our deck 3 weeks ago, I've been making improvements to that deck the whole time, every night. And so it's always the latest and greatest version hosted online. And I can track and see who's, looking at my stuff. Kind of already talked about this. Facebook's another way to map your connection path. AngelList, they're focusing to be on, some token stuff, but also syndicates. A syndicate is basically an angel investor who has backers behind them. Syndicates are relevant if you've already got about 2/3 of your round committed, right? It's not good for initiating a round. It's good for filling out a round. Angel groups, excuse me, I have to take a drink. Angel groups can be relevant. There are over 1,400 angel groups. If you go to angelcapitalassociation.org, I think, you can search for angel groups. Angel groups, you know, the advantage is you can pitch 60 people in one shot. Disadvantage is it's usually a pretty lengthy application process. Crowdfunding, you know, I'm kind of not so bullish on crowdfunding yet. I think it might be interesting in the future, but I think today equity crowdfunding is kind of attracts startups that aren't able to raise money from angels and VCs. You know, and then this last part here is scarcity. So sometimes if you're raising 500K and you've got 300K committed, or sorry, if you've got 300K committed, sometimes it makes sense to set out raising like 500K, and then as that fills up, raise your target amount. So your round always looks, you know, partly full. Looks like we have a question here. If I send report, does it allow you to select which investors it sends? Yes, it does. I didn't show that because you have to publish the report first, which publish means just create the URL. And then once you click send report, you have the option of sending it to everyone on your board, or you can pick, you know, just the people in your pitch column or your diligence column. It gives you granularity of who to send that report to. That's a great question. And again, we just released that yesterday morning, so if you find any little bugs or anything, please let us know. Okay, almost done here. So now you've been fundraising for, you know, 2 months or so. You're working your funnel really aggressively. Now it's time to actually try and close your round. One of the hardest parts about fundraising. It's all hard, but this is one of the hardest parts. Every time you have a pitch meeting, I want you to make it a habit to do these first two things. One is, don't walk out of that pitch meeting until you've asked them what their interest level is. And it can be just simple like, hey, I enjoyed telling you about Foundersuite today. Thanks for the time. I'd love to hear your interest level, what your typical check size is, and what are next steps. And you usually get a generic answer to that, like, oh, we'll talk it over at our partners meeting. But if that answer includes a next step, like having you come back in, that's a pretty good buying signal. Likewise, make them chase you a little bit. Every investor that has been doing it for any amount of time has lost out on a competitive deal where there were more investors trying to get in than there were seats at the table. And so you want to be signaling that, you know, it's not an automatic that they get into your deal. And a simple example is, hey, I really enjoyed telling you about Foundersuite, sharing our vision. I'd love to hear how you work with your portfolio companies. And in particular, how would you help me build Foundersuite? Make them like actually pitch you a little bit. And you're showing that it's not automatic, that they might actually have to work to get into your deal, to hustle to get into your deal. And of course, as you build momentum on your round, that becomes even more powerful. You get more confident in doing that. And it just makes investors go crazy. I've seen them act like piranhas, you know, if you have momentum and actually make them kind of, you know, jump through hoops. It's pretty wild. It can take multiple meetings to get that first term sheet or commitment. My rule of thumb is if I'm on meeting number 6 with you and you still haven't been able to make a decision, you know, you're probably a tire kicker. So I might move you into my, you know, different column. And likewise, it usually takes 3 to 6 months to raise money, sometimes longer. If you raise money in 2 months, you're a master and you should be, you know, I'd love to hear your secrets. If you're still fundraising 8 or 9 months after when you started, something's probably not working right. Might give you time to take a break. It can be very hard to get a no. Investors, this is one of the really annoying parts about fundraising, is they'll do like VC ghosting, where you had a great pitch meeting, you think you just nailed it, and then you follow up, you know, the next following Monday, and silence, right? They don't respond. My rule of thumb is I'll send like 2 or 3 responses or follow-up responses, and then I will move them into, so you have a column over here called no response, right? So I have my hard no's, and then I have my no response, which is for people who just stopped responding to me, and then I have my revisit for Series A. And this is where I move people who say, you know, I like what you're doing, but you're too early for us. That is a no, but it's kind of a softer no, so I have a dedicated column for that. When someone does say yes, we use Paul Graham of Y Combinator, his handshake deal protocol. So you're out at coffee, he says, I like what you're doing, put me down for 50K. You go back to your laptop after the meeting and just send a little email. Hey, really enjoyed the meeting. Just to confirm you're in for 50K, can you just write back and let me know that's the case? If he does that, then you can pretty safely move him into a committed column. If he doesn't do that, I would treat him as a prospect and, assume he's just still a prospect that needs to be cultivated. And then last but not least, if you're going to raise money, you have to see it through to the end. Keep your foot on the gas pedal all the way until those wires are in your bank account. I've seen so many startups start to raise money. 2 months into that, they're getting frustrated. They're getting rejected a lot. They're sick of that. The CEO is getting pulled back, into the business from customers or partners or whatever. And they kind of take their eye off the fundraise and the thing collapses. And it's really sad to see. So if you're going to raise money, just keep at it until the money's actually in the bank. Here's our money shot. Yay. Can't wait for the next season of HBO Silicon Valley, although I think he's not going to be on it. And then last but not least, put this all in perspective. You just raised $1 million. Congratulations. I'd love to hear about it, especially if you're using our platform. That maybe buys you 12 months of runway. What that really means is you need to start fundraising again 6 to 9 months from now. So get out there, have a good dinner, celebrate with your team, and then go get them. I will send out these slides. Of course, if you haven't checked out Foundersuite, I'd love you to check it out. We have a Facebook group, not too, maybe about 1 or 2 posts a week, so it's not too active, but some pretty good hacks and tips on there. And then something I'm very, very excited about is we have this new podcast on iTunes and SoundCloud called How I Raised It. I think we're up to about 18 or 19 episodes now, but basically I do about a 30-minute interview with founders who have raised money, seed, angel, Series A, just did an ICO. That's not out yet. But it's really interesting. We get into the nitty-gritty of how they actually built their target list of investors and engaged them. So check that out and subscribe. So we have a few minutes for questions if anyone has questions. And if you don't mind, we could use this chat box. Anyone got any questions? Anything at all? Yeah, if you don't mind, if you didn't hear me say it, if we could type your question into the chat box, that would be ideal. Quiet group. A lot of times there's a million questions. That's okay though. I guess, does this talk make you more excited to go raise money or less excited? I think sometimes I scare people off with all the talk about ulcers and rejection and everything else. So I'd be curious if you're more eager or less eager. All right, guys, if there are not any questions, it can end it. Oh, here we go. Thank you, DS. I'm not sure who DS is, but Danielle. Okay, Danielle, great. I find the angel world trickier to navigate and vet compared to VC firms that have a clear outline. Yeah, definitely true. We've had success getting meetings with VC firms from cold emails. Coming through that, we're a great fit for angels. Okay. Yeah. So the question is basically, other than the warm intro, do you have any other icebreaker suggestions for angels beyond a cold email? I mean, it's tough. I have sent cold emails in the past. I've never got someone to write a check from a cold email, right? Because again, a lot of even angels will use how you reach them as a filter. But if you just can't find any mutual connection, you have to go the cold outreach or build a relationship with them online. If sometimes that's by being a Twitter follower. I've seen that occasionally work. But frankly, in the situation you're describing, it's probably a really articulated cold email, showing that this isn't just a mass, blast that you've sent out, that you've studied their profile. Maybe you found, I get these every now and then, right? And when someone drops me a cold email, but they're referencing, like, I have a blog about our sailing trip where we sailed across the ocean. They're maybe referencing that, or they're talking about some other things that are on my public, online persona. I at least pay attention and read the email and usually respond. So I think if you're going to do the cold email, you have to put in that extra time to kind of, articulate why you're reaching out to them, something about their background. That's the best advice I can give. It's not perfect, but better. More eager. Oh, good. You're more eager to go raise money, Brian. Good context. Worthy room. Thank you. Let's see. Great question. You don't mention the quality of the business and how that affects the raise. Oh, absolutely. I mean, the quality of the business and how that affects the raises is, I almost don't mention it because it's like assumed or a given that you need to have a decent business or at least a vision to raise money. In doing this podcast series, one of the questions I ask a lot of the founders that raise money is like, when you're at your angel round or your seed round, what were you pitching, right? And when you're at your Series A, what were you pitching? And a lot of times, like at the very early stage, the angel round or pre-seed round, it will be a vision and team, or a dynamic market and a vision, or sometimes it's not like necessarily a business that is fully baked yet. As you go raise the Series A, then it's the vision plus metrics of the business, right? So kind of add on these other pieces to it for sure. All right, Brian, I had a connection and follow-up email exchange with Goldman Sachs. Oh boy. Can you compare contract working with large institutional investors like Goldman versus other VC funds or angels? Goldman has more money. I mean, it's like an unlimited bank account, right? So typically, I actually just met a woman at SaaStr who works at Goldman's venture fund. Typically, they're looking to get in later and put big checks in, right? I think Goldman's fund, I could be wrong, maybe it was JP Morgan, but I think Goldman put in, a big chunk of money into a late Uber round. I mean, that's typically what they're looking to do. They have so much money, they can't be writing $500,000 checks. They're looking to write larger checks. I would say when working with like financial firms like that, I mean, it's going to be, sometimes with angels, it's about vision and passion and stuff like that. With financial institutions, it's more numbers, right? What do your financials look like? I mean, that's the context that they're used to. View number 12, any best known methods for aligning timelines between follower leads and syndicating around multiple VCs angels? Yeah, this is a really great question, actually. So I'm going to answer it slightly different way. One of the hard parts, one of the key things that you need to be doing as you're fundraising is you're trying to find that lead investor, right? Someone who can be your lead investor, and once you get someone to be a lead investor, usually that entity is putting, majority of the money in, then you can go out to everyone else you're talking to, use that as a catalyst to get them to come in or out on the deal. Before you have a lead investor, it's hard to control the timeline because you're still just searching. Once you have a lead investor, you can set a timeline and saying, hey, we just got, FFBC as our lead investor. We're looking to fill out this round by, March 31st. We need commitments in by March 7th. Where are you at? Where's your head at on the deal, right? Once you have a lead investor, you can kind of set that timeline and control it. Before that, the best thing you can do when you're meeting with lots of angels is say, hey, what do you need to make a commitment? How much would that commitment be? And can I mark you down as, a conditional commitment, right? If you need a lead investor before you're willing to come in, assume I get a lead investor, how much would you commit? And then you kind of add up all these conditional commitments, and that helps you get the lead. Because then when you're pitching a potential lead, you can say, we've got $400,000 in, soft commitments from 7 different angels, really looking for that lead. That helps you get the lead. Is there a way to filter for round type? Not in our database yet. I mean, that is kind of advanced data and harder to, there's a reason PitchBook charges $20,000 a year, because they have 300 data analysts doing that level of kind of parsing data. We charge $49 a month, so we can't do that. So there's not really a way to filter by round. Typically, you study open up the website of the investor and look at it. It's a good question. Something I'd love to build. It's hard if you don't have 300 data analysts on staff. These are all good stuff, guys. I have to jump. I have a hard stop at 10 a.m. I have a pitch meeting with a potential investor in 1 minute, so I need to go. But I love all these questions. If you have more questions, feel free to email me, Nathan at Foundersuite. Oh, great. Thank you very much. Feel free to email me, and I appreciate your time. Have a great weekend. Over and out.